we expected a rather a contraction of 1.2% for the month of February. It's grown. The IIP has grown at 0.6%. Now this is good actually, now much better than what was initially estimated. You can't compare it to Jan and say that, hey, Jan grew 2.4 and therefore 0.6 is disappointing. This is much better than what we were working with. Now the final tickers will come up and we'll figure out what's really contributed to this. We expected a very dismal performance from electricity and mining. Maybe that has actually performed a bit better for the Feb IIP numbers to do what they are shown right now. 0.6%. It's a much better number than what we are working with. I don't know whether that has a meaningful impact on the markets or no. Really, the markets are not really reacting. 63 points off still. So infees kept the markets off. But yeah, the initial numbers are positive. While we wait for further data, actually manufacturing has come in at 2.2%. So yes, that is, did I read the number correctly? At positive 2.2%, I think that's a big positive for the month of Feb. Maithili, your initial comments.
Well, it certainly is positive because though the ET poll was little negative, there were some other polls which showed the performance would come in at about 0.7%. So this is, I think, more or less in line with what was expected, and particularly because all around the data was pretty gloomy, people were expecting very negative news. I think the fact that it's come in at 0.6 is positive. It's a little unfortunate that we should think of 0.6 as happy and positive and, you know, kind of keep our spirits up, but that is the reality of the Indian economy today, and particularly because the manufacturing growth has come in at 2.2%. Agreed, it's not very great at all, particularly if you consider how manufacture performed earlier. But given the fact that there was this terrible fear of manufacturing growth really plummeting, if you look at car sales numbers, if you look at, you know, the fears about how it would impact jobs, etc., I think the fact that manufacturing has come in at 2.2% is a little heartening. I wouldn't really call it heartening. That sounds a bit of an exaggeration, but certainly it does seem as if the economy has bottomed out. But there's just a caveat here that given the fact that IIP numbers has been so fickle in the sense they're constant revisions, I think one must be a little guarded and say yes, the prima facie, the initial indications as per the first data is positive, but let's wait and see and let's hope there are no major changes when the data is revised.
Maithili, the CPI inflation numbers are out as well. Just an initial thought, double digits still, while talks may be that it will probably revert to single digits, but 10.3%?
Well, it's a little early to say that because we haven't seen too much change really, but if it's part of a trend, that would be certainly very welcoming, particularly because we've already seen WPI really kind of trending down, core inflation trending down. So if the CPI number also carries on with that trend, because in the Indian context what was very disheartening was this huge gap between the CPI and the WPI. The WPI core inflation seemed to come down and the CPI kept going up, particularly because if you look at food inflation, which is the biggest worrisome factor for any political party, particularly in going into the elections, if now we are seeing inflation at the CPI level also coming down, that is certainly very heartening, particularly because one must remember we're going into the summer months when usually prices look up, particularly food prices, vegetable prices go up. So if this is part of a longer term trend, then certainly this is good news for a beleaguered government.
Maithili, the disappointment, actually, let's talk about the positives, if at all, first. Jan, manufacturing 2.7%. Manufacturing is at 2.2% this time around as well. For all the obituaries being written, and this time around also it was not expected to be great. It has come in a bit better than what at least the initial estimates were.
Certainly, but as I said, the unfortunate part is that we are so much happier today. Once upon a time, we talked about double-digit growth. We were talking about India shining. It's a very sad commentary that today we're quite happy with manufacturing coming in at 2.2. But I think overall, yes, there is this general, air of pessimism, despondency. So even at 2.2, we're clutching at straws and saying, well, it's not as bad as we thought it would be. So that is certainly, if it shows some reversal of sentiment, if it can help, it will certainly be a big factor. But at the end of the day, even though investment decisions are taken on the basis of hard numbers, cold facts, sentiment matters. And to the extent that sentiment seems to be kind of looking up slightly positively, then I think it's certainly good news. Particularly if you also look at capital goods numbers. Capital good numbers also seem to be suggesting there's a slight change in the overall air of despondency and sentiment.
Indranil Pan, Chief Economist at Kotak Mahindra Bank, also joins in on the show. Indranil, your initial thoughts really, we were expecting a contraction. There is a 0.6% growth. Heartening, or you would say that, we're just making too much out of a very small number?
Definitely a positive surprise, no doubt. But I think the bigger issues that really need to be seen is that the consumer goods production has been positive 9.5%. But overall, I think the sentiment continues to stay on the weaker front. And you're right in pointing out that this 0.6, which is a marginal positive, it doesn't really do much in terms of changing the trajectory for growth that we all had been looking at. And we would continue to probably say that the growth could have bottomed out and there could be some positive upticks in growth, provided that the global sentiment remains stable, provided that the oil prices, which have actually now come down to about 103, 104 levels, that sort of sustains to a certain extent. So I think that could be the perspective that this data would be throwing up.
Indranil, if I can just ask you a question over here. Do you think this is part of the green shoots that Montek Singh Ahluwalia has been talking about? The finance minister, the PM says, let's not be despondent, things are turning around. So does this fit in with that larger picture, or is it too early to say? Particularly because the overall numbers, if you look from April to February, they're still not very good. Still somewhere around about 1%, which is way below what we had last year.
I wouldn't say green shoots immediately. I think the perspective for the economy at this point in time is that the economy is stabilizing. The last 4 or 5 quarters of downswing that we have seen in terms of the consumption demand could actually be coming to an end. The Reserve Bank of India, some positive momentum in terms of the interest rate cycle, that could also sort of help stabilize the economy. Overall, the global perspectives are looking relatively better in 2013 compared to 2012. So I think all this is coming together to provide a sense of a stability in the economy rather than a continuous crack in the economy. But having said that, I think the perspective again is that the investment demand is unlikely to be growing or turning around anytime soon. We are in a phase where very gradually we would continue to also look at the ramifications in terms of the overall political scenario of the country, with state elections kicking in from around September and then on to the union elections. So there could be a belief and a fear that policy steps might not be so seamless going ahead. So all these would be the incremental factors that need to be watched out, along with the fact that the current account deficit continues to stay on a very shaky ground. And the saving investments dynamics for India is also not too conducive enough.
No, absolutely. I couldn't agree with you more that this is definitely a little bit more of a positive surprise. But given the fact that, if you remember, the core sector actually showed a decline of 2.5 and the core sector accounts for almost 40% of the IIP, would you agree that maybe the news is better than what it seems from just a superficial look at the numbers? That means other sectors must have done much better. The non-core growth would have been much faster to even give you that 0.6%, because when core sector declined by 2.5, clearly that means maybe the numbers don't quite show the actual fact that the health of the sector, industrial growth, is a little bit better than what that 0.6% would suggest. Would you agree?
To a certain extent, I think there could be a disjoint in terms of, for example, electricity was showing up as a negative 4.1% in the core, while as the electricity is a negative 3.2%, if I'm not mistaken, on the actual release. Further, the mining sector seems to have been is reflecting a better number in the IIP series than the core. But I think the consumer goods segment, which is not a representative in the core, is also sort of doing better and pushing up the IIP numbers to a certain extent. And my own perspective is that given the fact that in February there has been a bit of a turnaround in terms of the export dynamics, that could also be helping the overall production dynamics in the month. So overall, yes, core, we search for reflections onto the IIP from the core, but there could be some amount of disjoint noises between the two series.
Indranil, just one question, actually would pose it to Maithili as well, but to you first. And mining, the disappointment continues. I mean, while the numbers were expected to be bad, they've been terrible. Contraction of 8.1%. But I'm guessing it doesn't come as a surprise, looking at just the news reports that have been floating around with the mining companies also sharing their views.
No, absolutely. I think what we would be really looking at in terms of the incremental policy direction from the government is more to do with the mining sector and how we can suitably harness the resources that are there for anyways in the country. So I think that is the next step that would possibly clear the bottleneck for the future growth perspectives of the country.
I mean, I know you were quizzing Indranil on the same thing, but the cap good numbers that have come out this month, as well as the manufacturing number, which has just probably shown a little bit of a positive surprise, does it maybe show that at least on the manufacturing front, things may be bottoming out or maybe close to bottoming out?
No, that's exactly the point that I made in terms of the fact that if I'm looking at the broad indicators for the economy's perspective, relatively better growth in the overall global situation that has led to a bit of an uptick in terms of the export. On the other side, the consumption demand cycle, which was on a downward trend for the last 4 to 5 quarters, that could actually be stabilizing with some help also from the Reserve Bank's interest rate cuts. The other thing that we would now be looking forward to is what really happens in terms of the food price inflation. I'm not really I've not really seen the clear factors that have driven the CPI on the lower side. But if it is from the food perspective, and if it actually means that it releases a bit of personal funds for consumption of other items rather than food, that itself could provide a stability perspective from the manufacturing point of view. So I think, yes, you are right, and there's the point that I've already made also, that we are looking at a bottoming out story. We are not really looking at a significant upside story from now on. Therefore, I would probably hesitate to clearly mark this as a green shoot. But there is definitely a sense that the economy is stabilizing at the lower level at this point in time.
Would you agree that, maybe I'm clutching at straws, but would you agree that to the extent that mining is a sector which is showing a particularly bleak performance, and this is one sector where I think 3 of the biggest ills before the economy today, in terms of issues of land acquisition, in terms of environmental clearance, and in terms of corruption, with the Supreme Court having to intervene and cancel various licenses, etc., these are all by and large within the government's domain, and maybe one could do something about this in order to improve the performance of the mining sector. So if the government were to do that, maybe the overall picture of industrial growth will be far healthier. So to the extent that these are things within the government's hands, there is reason to be a little bit more cautiously optimistic. Would you agree?
Very difficult to provide a direct answer to this, but I think, as I pointed out, that we are heading into a stage where the whole scenario could once again get a little hazy in terms of the election atmosphere, and to that extent clear directions in terms of policy and very hard decisions in terms of policy measures from the government could also be proving to be a bit of a problem. But on the other side, leaving aside the policy perspective, I think the need of the hour, given the fact that the private investment demand is unlikely to be kicked in very soon, the need of the hour possibly is to provide some boost from the infrastructure perspective from the government. However, the funds are continuously lacking at that end, and there is a clear direction from the government side that fiscal contraction needs to be a clear strategy. So I think there are various pulls and pressures that are working on the Indian economy, both from the fiscal side of the picture and therefore the economic side of the picture, and also the political and the policy side of the picture. So given this dimension, and along with the fact that the global conditions continue to remain quite stressed even today, it would be very difficult to see most of the emerging market growth story and India's growth story also reviving in a very significant way immediately.